Good morning and welcome to this Monday morning's start of KickStart, our specialist finance webcast with Knowledge Bank and Crystal. I'm Nicola Firth from Knowledge Bank and we have Jo Breeden from Crystal. So as always, I'm going to start you off with a roundup of last week's events. And what a week it was. So let's get straight off with that then. So there were 987 criteria changes last week. Now that was up from 446 the previous week. We did obviously have the bank holiday Friday in that previous week as well, but still, even with the extra day, that's still quite a difference. And that was down to the announcement with regards to valuations and the unlocking of the lockdown. So the majority of those were positive changes. They were, as I'll come on to those, but the vast majority were positive increases of LTVs and the resuming of physical valuations. So we saw Foundation Home Loans, Skipton International and Bluestone Mortgages re-enter the market, which was fantastic. So some specialist lenders there straight back into the market and with some really, really good propositions and products as well, which I'll come on to shortly. So we've seen that the LTVs are slowly increasing. Nothing dramatic. We've not seen the 90-95% returns just yet. Whether we will, my thought is that lenders will probably just hang back. Two reasons really, just to get a feel for what the market's doing. But secondly, you know, if you bear in mind, we don't have any comparables over the last few months, not really, other than the ABMs. So I think they'll want to get a few more recent comparables there as well. And we also saw further criteria launched for the self-employed, furloughed and contract workers. So again, I'll come on to that in more detail. So if we go through the highlights of last week, so Halifax made some changes with regards to self-employed furloughed workers and to do with contracts as well. So for 0 hours contracts and also just contractor income. So what they have said now at Halifax is that self-employed applicants may be referred to underwriters for review, as what they're looking to do is evidence long-term history and stability of the business of the self-employed person, and also look at the sector that it's in as well, to see if that is sustainable. So furloughed workers or workers who've been asked to take a reduction in their salary, they're being considered on the amount of income currently being received, and that's the amount that you need to key on their application. Again, we talked last week, didn't we, or the week before, it was about bonus, overtime and commission, and evidencing that that's regular, and Halifax wanting to do the same. And with regards to contractor income, they're going to be looking at that on an individual basis and see what industry it's in. Again, this all sounds very industry specific, I have to say, a lot of the stuff that we're talking about at the moment. And then 0 hours contract, again, vastly, unchanged from their main criteria, but if they're not currently in receipt of income because they're furloughed, then they're receiving a significant reduction, they'll take an average of the last 12 months on that one. So we also, hold on, sorry, I've skipped back on my, there we go, sorry, do apologise, must have pressed something there. So then looking at Santander, they've increased LTVs on residential back up to 85% and 75% on Help to Buy. And we saw TSB increase their LTVs from, they were 75%, they've gone up to 80% now as well. Accord Mortgages, again, they've increased their maximum LTV to 85% and their maximum property value up to 2 million. So that's great. They've gone back up. NatWest, I'll come on to a little bit more detail shortly. They've also changed how they assess self-employed income. And HSBC made some changes around foster carer and self-employed income for limited companies. So that was they were positive changes as well. You can take a look at those in more detail on Knowledge Bank. So highlights then. So Accord, Halifax, HSBC, Skipton Nationwide, Fleet, Mortgage Works, Shawbrook Bank, Coventry, Leeds Building Society, More to Life, NatWest, Pure Retirement, Santander have all confirmed last week that physical valuations can now be booked, and that's on residential and on buy-to-let as well, where applicable on product ranges. What we did see is a lot of them were saying that that their physical valuations would go alongside desktop valuations where possible. Of course, there is a backlog, so they're talking about sort of trying to get that down, understandably. So I think where possible, they are going to run those together in some cases. But what was an interesting one actually, Leeds Building Society. They were doing resuming physical valuations, but what was interesting is they're the only lender that we've seen so far that are going to be doing, they're piloting an external valuation option for your clients. So this was interesting because, of course, physical valuations are resuming, but bearing in mind that some people are not going to be comfortable with other people going inside their home, even with social distancing measures in place. So for those clients who are happy for somebody to come to their property but not necessarily enter, they're piloting the external valuation that they'll be able to go around the outside of the property and use that in conjunction with a desktop valuation. So I think that's great and really, really considerate for your clients, and perhaps something that others might do as well. So we'll see what happens there. So Coventry Building Society, they increased their LTV on residential purchases and remortgages. So I mentioned those. Cambridge Building Society started doing desktop valuations for residential and buy-to-let up to 75% loan to value with a maximum loan of £500,000 and a property value of £1 million. And then we saw Buckinghamshire Building Society, they announced their AVMs last week. So funnily enough, everyone else was going out to physical valuations and they announced their AVMs, but still it means that things are going to be moving, and they're doing AVMs up to 70% loan to value. Typically the restrictions that are in place for desktop valuations are, the flats, the new builds, that kind of thing, and they're pretty across the board, to be fair. And West Brom for intermediaries, they increased their LTV on residential remortgages up to 80% as well. So just moving on, Bluestone, it was great to see them back in the markets. They've resumed lending on both residential and buy-to-let up to 75% loan to value. So this is on their Clear product range, which allows low levels of adverse. Plus, they'll do the 1 year self-employment and consumer buy-to-lets and first-time landlords. So they've got some absolutely brilliant criteria there as well. They'll also do things like ignore all defaults and CCJs registered 3 years ago, even if they're outstanding. They'll allow one satisfied default registered in the last 3 years with no monetary value limit, and ignore all CCJs and defaults under £300. So as well as things like up to 2 missed payments for unsecured credit in the last 6 months. So really, really, really good criteria from them. And Foundation Home Loans, another specialist lender, resuming on lending on residential and buy-to-let. That's from today. So you can place applications with them today, and they've got a new range of products that should be showing you on your sourcing systems as of this morning. And then Skipton International returned to the buy-to-let mortgage market for overseas investors, and that's up to 60% loan to value. So Skipton International, what they're really good at is doing buy-to-let mortgages for clients that live abroad, so expats that want to invest back in the UK. And finally then, so there literally was just one good news story from last week, and it is the one that we were all waiting to hear about, and that is that the housing market reopens. That was music to all of our ears, wasn't it? So we did put, we do our email, and we did put a link in there as well that you can actually read the guidelines that they put in place, because they're quite comprehensive really, the sets of guidelines that have been put in place, and we expect to see a lot of estate agents opening back up from this week. So, and that's what we've all been waiting for, and it's been very much needed as well. So that's everything from me this week. So I'm going to hand over to Jo, and obviously I'll be around. Stick around for any questions. Have a great week, and then I'll speak to you shortly.
Great summary, and it's really good to see so many changes again. I think last week was a watershed moment, really. And I'd fully expect that over the next couple of weeks, we'll start to see more and more lenders increase their LTVs in the specialist market. I'm sure. So from our point of view, yeah, absolutely. We were over the moon. We've really struggled with commercial since the lockdown began, really, and partly because of the payment holiday piece, partly because of C-bills taking up a lot of lender prime lender capacity and challenger bank capacity on that front. But it seems that appetite's sort of creeping back in last week, and pleased to announce that we got a £2 million loan for a commercial investment property in Manchester on a Currys PC World clearance store away with Alaka Bank, and that was at 5.15% margin. So that was great news to see, because we've struggled, particularly on the larger loans. So to see a large loan and commercial investment, absolutely unbelievable. I mean, I think it is, we're a bit fortunate there, because it's not just Currys PC World with 5 years remaining on the lease. It's also a clearance store, so there's no jeopardy there of these guys sort of closing the shop because they need to clear the stock out. So bit of good news there, and well done the guys at Alaka Bank for supporting our broker partner on that one. I think completion of the week as well sort of mirrors what Nicola was saying with the housing market opening up. We definitely, so on a lot of refurb properties, we've had a reluctance to actually draw down on funds from lenders until builders are back out on site, and obviously that sort of started to happen last week. So we're delighted to complete on a finish and exit product with UTB, where we had a wind and watertight buy-to-let being built. There was a reluctance to draw down until the builders were back on site. That happened, so we enabled us to draw the funds down at 0.75% a month, 144k last week. So that'll enable that borrower to complete that site, and we'll take it out of resi mortgage, or the broker will take it out of resi mortgage at the end of it. Our lender hero of the week, absolutely. Shawbrook Bank. They've been open for new business all the way through this process. I think last week, with the announcements of physical valuations going out, they significantly pushed their pipelines forward, and where possible, we got valuations out last week on a couple of transactions, and the turnaround times and delays don't seem too bad on getting those back in. They'll end up 75% LTV. They were the first specialist lender to raise the LTV, so that's great news for us as well. So absolutely Shawbrook last week, not only on the new business front, but getting pipeline moving to 75% LTV was absolutely fabulous. A couple of big announcements coming this week. It seems that one particular huge specialist lender will be back in the next couple of days. More on that as the announcements are made official. And we just literally, whilst we've been on this call, have had an announcement from Hampshire Trust Bank that they're increasing their LTVs up to 75%, and that, depending on what property type, that's semi-commercial, buy-to-let, and limited company buy-to-lets as well. So really good news there, guys, and lots of encouraging green shoots across the market. And it's great to see that there's some commercial property activity, loans being taken on the new business side as well. So that's it for me this week. I think next week we'll be inundated with updates, I would imagine, and Nick will probably steal the limelight a bit more on that one with a number of changes. But really, really positive news all round, guys, and enjoy your week. Let's smash it.
Brilliant. I think we've got some questions, Jo. So the first one from Tammy. Any news on Together Money and when they may be coming back into the market? Yeah, I mean,
we were fairly significant partners with Together Money, as I'm sure a lot of our brokers are aware. And obviously, it was a shock to us as much as anyone else that they'd actually completely stopped lending and not honouring pipeline. We've actually seen over the last 5 days or so been working on them on their new criteria. I don't think that they'll be, when they do return, although we haven't got a date yet, I'm pretty sure the appetite and LTVs won't be where they were at before this lockdown, but without a shadow of a doubt, I'd probably hazard a guess that within the next 3 weeks we'll know where we're at, and again, following patterns of other lenders, I think they'll be reviewing their existing pipeline to see how that fits against new criteria, and then potentially be open for new business thereafter. So I'd give it a couple of 3 weeks, and again, feel free to reach out to me if you want any more updates on that as and when they do go live, but no official news yet.
Brilliant. Fingers crossed that won't be long.
No.
We've got another question from Graham. So NatWest self-assessment, can you advise, please? So self-assessment. Are we? What I think you might be referring to, Graham, and please correct me if I'm wrong. I think they made some changes. I'm just going through them here. They made some changes last week to the way they assess self-employed income. So I'll just cover this. If that's not what you meant, Graham, obviously just send us a note. So they last week they made some changes to the way the self-employed income was assessed, and this was from Friday for both residential and buy-to-let applications. And so when you're assessing affordability, you must use the lower of the average of the last 2 years' net profit, the most recent year's net profit, or the confirmed government income support amount. So that's what they're saying. Now I'll just skip to some notes I've got here on it. So these changes, they are going to apply to applications that have already been submitted but not completed. So where you've informed them that a material change to the application, or where your clients contacted them directly to make them aware. They did tell us though last week that they do not expect you to proactively review your pipeline. So that's something at least. So they've also made some temporary changes to their packaging requirements for self-employed, for new business on self-employed. That is on their website. There's quite a lot of information, so I'll not read it all out here, but there's it was on, if you get out the Knowledge Bank daily criteria updates, it was on Thursday's email, Thursday of last week. So if anybody wants that resending out, if you just drop either me or Jo a note after this, and then we'll send you that out, because the full details are all in there. So oh, thanks Graham, that's what you were after. Brilliant. Okay, fantastic. So has anybody else got any other questions, because it was quite a jam-packed week? Definitely. No, I think they're all bracing themselves, Jo, for what this week's going to bring.
Promise you, it's going to be a great week. We're going to get a load of it.
It is.
Probably have half an hour session next week, Nick. I think that's what we're doing.
Yeah, definitely. Well, it was great to see, there's such a buzz around last week after the announcement, and seeing that flurry. So yeah, absolutely. We will look forward to bringing that next week, won't we, Jo?
We will, absolutely. I'm excited already.
Brilliant. Fantastic. All right, I think well, that's everything. So we will speak to you. Have a great week. Oh, wait a minute. Sorry, Wayne, you've just snuck in there at the last minute, you cheeky monkey. Are you likely to carry this on when normality returns? Don't see why not. I don't see why not.
Yeah. It's good.
It's we've been doing the daily updates with all the criteria changes and everything on there, and we've been asked the same question, and it just, I guess there has been a gap in the market. Oh, Claire, yes, please. Yep. All right, then I think that's decided.
Done. Sold.
Sorted. All right, Wayne, definitely. That's our Monday morning sorted from here on in.
Yeah.
So yeah, definitely. It is one of those things, as we get back to normality, obviously normally me and Jo would probably be in meetings and things like that. So we'll try and schedule those around, or send a ringer in if we aren't available. But I don't see any reason not to carry them on. I think it's...
And look, and it's good news for you guys to spread to your teams and your own team meetings as well. So we're happy to help you out with this content, and no matter the size of your business, we're here to partner with you and just help you grow. So collaboration, that's what it's all about. Yeah, definitely. All right, brilliant. Well, have a good week, everybody, and enjoy the sunshine. And we will. Actually, it's bank holiday, isn't it? Next weekend, next Monday. Well, so we'll have to do it Tuesday. Back on a Tuesday. We'll see you next Tuesday then, if that's all right. Yeah, great. Brilliant. Hey, thanks, take care. See you. Bye.